Apple's down over 13% from its all-time high that it set just 3 months ago. Question is now the time to buy? It's definitely a time to take a look at it because this is a very popular stock that has a lot of potential. We're going to go over the numbers, we're going to go over the valuation, and we're also going to go over some of the qualitative metrics of this company. So first off, let's go over some high-level aspects of Apple. $2.71 trillion market cap. It just got surpassed by Microsoft. Microsoft's on the upswing in stock price. Apple's on the downswing. But that $2.71 trillion market cap was over $3 trillion at one point, which was the largest ever. You have a company that's $385 billion in revenue on a gross profit of 45%. Now, guys, this is big. And the reason it's big is they create a lot of hardware. If you look at a company like Microsoft, which is all software, 68% gross margin. That means for every extra dollar they sell, Microsoft puts 68 cents to the bottom line before taxes, interest, etc. While Apple's at 45%. But again, a lot of that is hardware. Hardware is more expensive to make with lesser margin, okay? Free cash flow in the last year, $107 billion versus profit of $100 billion. So higher free cash flow than profit. And the 5-year average of $90 billion in free cash flow versus 83.6. So this huge behemoth of a company is still driving up free cash flow and profit, which is incredible. All right, now, look at this return on invested capital. This is moat status. Now, obviously, they can't reinvest this $100 billion a year at these high rates of return. But this shows us that this company has a great moat. And when money is invested in the business, it does well. As they buy back more shares, this is likely to increase. Now, overall, they pay $15 billion in dividends, which is about a 0.56% dividend yield. Isn't it amazing? This company is so valuable that the 0.56% dividend yield still costs $15 billion per year, with a bottom line profit on the upswing over the last year versus the last 5 years, 26% versus 24.4%. Okay, so that's some of the numbers of Apple. Now, it seems expensive, 27 times earnings, 32 times 5 years earnings, 25 times free cash flow. That seems expensive. And Apple's not going to be a big grower. It's such a huge company. How do they possibly grow? A couple of things about Apple. One, largest seller of tablets, holds the biggest market share of about 40%, but that is down from Samsung, which has increased its market share from like 7% all the way up to 19%. So just clipping away at Apple there. Now here are some of the data on the number of apps on the store over the last years. Going back to 2008, 2023, it's hovering around 4.5 million, closer to 5 million. So it's still growing, but not as much as before. Light blue is the apps, games are the dark blue. So they're still increasing, and guys, they are really strict on their rules about the App Store and the revenue take. They're really trying to control that. Some people are fighting back on it. I think they just recently gave in on Fortnite and Epic Games and Fortnite being able to sell on their own. So there's probably going to be a lot of litigation having to do with Epic Games. Now, guys, one of the areas of potential growth for Apple, which I love, is their services business. Services tend to be very high margin. Why? Because you're building the service, and once the service is built, especially in the software world, it costs nothing to recreate. And this is their service revenues since 2015 as a percentage of their total revenue. So not only are service revenues obviously increasing as their revenue goes up, as a percentage of their revenue, it's on the upswing. So we love seeing that. That should be able to drive up gross margin and then also drive up profit margin. So even though Apple may not be increasing their revenue by a ton, if they're increasing high profit margin revenue, they can drive that bottom line at a faster clip. Now here is their actual services revenue in billions of dollars. We're at about $2.5 billion back in 2012, and now we're at about $22.5 billion. So an increase of about 9x. Not bad, guys. Again, higher margin business. That's what we want to focus on here going forward with Apple. Apple immerses you. I belong to Apple One. I don't even know what it's called, but I basically pay $35 a month. I get family sharing. I get music. I get all these other things that are just combined, and it's just easy for me to deal with. Now, guys, one thing I do like also is this is Apple's R&D, research and development by year. So it shows they're not just being complacent here. So if you look back to 2007, $0.78 billion, $780 million in R&D, and now they're close to $30 billion a year in research and development. As they spend more in research and development, the goal is to create newer products, stay relevant, keep people in their ecosystem, and dominate their markets even more. This is about maintenance, I think, more so than actual massive growth. So let's go check out some of their more specific numbers here within a breakdown of the company. Guys, there's two things I really love about Apple that I'm going to show you in 2 seconds. Now, you're watching this video because you want to make more money. That's bottom line for everybody who watches any of these videos. You've got to remember that investing with confidence and finding your own method that works for you will lead to the best results for you. You're the product of the people you surround yourself with. So you need to join a group where your desired result is the norm. So I'm giving you the opportunity to spend time in this community of like-minded investors where everybody's norm is thinking deeper and smarter about money and investing. Now that I'm surrounded by thousands of people that think like me, I'm able to ask questions. And just because they think like me doesn't mean they agree with me, doesn't mean I agree with them. I can ask questions, I can bounce my ideas off them, they can respond, they can ask me questions. It's an entire community of conversation about everything financial related. This allows me to make better decisions because now I feel more comfortable. And if somebody asks me a question that I don't understand, it tells me, wait a second, this might be relevant. Let me go find the answer. So no matter where you are today or where you want to go, there'll be somebody in this community who can talk to you who's either where you are or where you are going. I've invested millions of dollars over the last 3 years into this software because I use it and my team uses it every single day. And we use it for one reason: to make better financial decisions and to make more money and to sleep better at night because of those decisions. You're one great connection away from changing your life. And if you don't invest in yourself today, you're just delaying success down the road. So we're running a great opportunity right now, $7 for 7 days at everythingmoney.com, or click the link below. It's even easier. Check it out to change the way you're looking at things. So back to our 8 pillars here. Here are 2 things I love about Apple. Like I told you before, this high return on invested capital. But remember, you don't just invest because of invested capital. If that was the case, we'd just sort every company by return on invested capital and buy them all. That's not the way it works. You still have to pay a reasonable price. But I also love this: low debt. Guys, 100 years ago, in order to be a dominant company, you had to have factories. You had to have a lot of, and how do you build factories? You borrow money. There was a lot more in debt involved. Nowadays, great companies are going to be the ones that get a high return on capital and don't need a lot of debt for it. If a company doesn't have a lot of debt, it's going to stick around for a longer time period. And that's what's important here for Apple. So a lot of great things. But again, the X's are on valuation, but it could be okay. We don't know exactly if it's too much price to pay. So what are the analysts saying about Apple right now? So guys, this is actually pretty impressive. An increasing increase on EPS according to analysts, from $6.73 a year per share this year to $10.04 in 4 or 5 years. That's, again, analysts, so you have to take that with a grain of salt, but look at their revenue growth. Not as much. Oh, wow, big jump actually a couple years down the road. This has changed since the last time I looked. Mid to high single digits. Remember to take what analysts say with a grain of salt, because they still have their own bias where they want to keep their job. They want to make other companies happy to get more and more business for their major firms. But at least it's a framework of which to look at, okay? So leads us to our major question. What's the right price to pay for Apple? So this is why we go to our stock analyzer tool. Let me pull up, last time I looked at Apple. I pulled up Apple January 16th of 2024. Let's look at the assumptions I made back then and see if I still agree with them. Now, revenue growth over the next 10 years. I'm doing a 10-year analysis. I can do 1 to 20. I did 3, 6, and 9. Now, 6 I think is okay because of inflationary pressures, as well as the world gets wealthier and wealthier, I think Apple's footprint is going to expand. So I'm okay with 6% revenue growth. Okay, 9% will be difficult, but that's why I have it on my high side. But it's possible and not out of the realm of possibility. Profit margin. This one I might be too conservative on. I did 21, 23, and 26.5. The reason I'm wondering if it's too conservative is, like I told you before, services are increasing as a percentage of its revenue at a higher margin. So I could see this being bigger. So I might actually change this to 21, 24, and 27%. Now in free cash flow margin, you can see here that every metric versus profit margin is higher on the free cash flow. So how much higher? A couple percentage points. So I think here I should do 23.5, 25.5, and 27 point. Yeah, 24 is appropriate. 26.5 and 29. So these are jumps, and I do get that. And that's why it's important that if you have our software, you need to make sure you put your own numbers in here. Now, for the PE and price of free cash flow 10 years from now. Guys, this is the art of investing. What's the right premium to pay for Apple? If the market average is 15 for PE and price of free cash flow, do you think they deserve higher? Well, there's an argument to be made. High return on invested capital, not as high a growth rate. How do they weigh themselves out? I don't know. I put in 19, 22, and 26. I went a lot higher on the high-end PE. It is what it is. Now, for desired return, guys, again, these numbers involve zero margin of safety. I'm putting the market return of 9% in here because margin of safety is up to the individual investor, right? So I hit the analyze button. Low price, 91 to 105. High price of 235 to 250. Middle price of 145 to 160. Remember, does not include any margin of safety. Guys, if you want to see the other 30 companies that I want to own for the long run, watch our next video.